Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. We're hosting SFL Corp CEO Ole Hjertaker. Lots of exciting things going on at SFL, and we're happy to host him today. Ole, good morning and welcome. Thanks for joining us.
Thank you very much for having me. It's a pleasure.
Do you mind just kind of updating us? What's the current status of the company and what are some of the key priorities? There's been a lot going on over the last year.
Absolutely. So the status is that we have a fairly sizable and very well-performing portfolio. We have 70-some assets. That consists of liner vessels, car carriers, we have tankers, we have dry bulk vessels, and we have energy assets or drilling rigs in the portfolio. When we look at this company has now been live and stock listed for nearly 20 years. I think it's the only maritime company out there that's consistently been profitable and paid dividends every single quarter since inception. And, happy to go into that as well. We paid around $2.6 billion in dividends over the years and nearly $30 per share. So it's been hopefully, I think, fairly stable and good investments for investors who's been with us a long time in markets where, investors generally lose money or have low single-digit returns over time. We have changed the business model fundamentally over these years, and I like to call it a tale of two decades. The first 10 years, we had more of a financial lease type structures. We did a lot of bareboat deals or dry leases for maritime assets. But what we have seen over the years is that you really need to deal with end users. And to do that, you have to deliver something more than just effectively provide a financial structure or bareboat. You really need to deliver the whole product. You need to be part of the logistics chain.
Yeah, certainly, Ole. No, that's helpful. And of course, you and the management team deserve congratulations for navigating through such difficult markets and always keeping a substantial dividend paying out to shareholders. Yeah, I mean, we love the dividends, Ole, but more importantly, we love the results and the fundamental improvements that are behind those. And I know you went through some tough times with the Seadrill bankruptcies a while back, but we're on the other side of that now, and the track record over the last couple of years has been excellent in terms of increasing free cash flow and decreasing leverage, increasing the payouts. So certainly happy there. You mentioned sort of looking at equity for growth projects, but the economics have to make sense, of course. You're kind of on the opposite end of that right now because you have an active repurchase program, and the shares were as low as $8, which was crazy. I mean, if you just look at free cash flow yields, even price to earnings is crazy. It was well below your adjusted NAV. How does the repurchase factor into your current calculus when you think about capital allocation?
Yeah, we look at, share repurchase program the same way as we look at, ATM type programs. We call it sort of tools in the toolbox. We want to have access to various ways to manage our cap structure, including from time to time to buy back some shares. We did that in the previous quarter. And for us, it's all about sort of how we allocate the capital, what are the investment alternatives, and, how do we think when we can create more value for our shareholders. So we don't communicate specifically what triggers a buyback, or as we have done a few times in the past, last time like 3 years ago, when we had raised some capital in the market through ATM programs. But it's all, of course, tied to, do we think this will be beneficial for each individual shareholder in SFL, existing shareholder?
Yeah, I mean, over the course of the history of SFL, and I've followed your company now for like 12, 13 years at this point, the focus has always been on dividends. I mean, repurchases are very rare. What is sort of the most interesting and key exciting opportunity for SFL? And on the other hand, what is one of the more concerning factors or one of the bigger risks that you think about and you look forward to mitigating going forward in the market?
First of all, I mean, we're generally quite excited here. We do look at a lot of project opportunities, but we're careful before we do it. Like last year, 2022, I think we looked at or modeled out deals, with a gross value around $23 billion. We did less than one, for various reasons why we didn't do a deal. It could be we didn't like the counterparty as much. Maybe we didn't like the asset, et cetera, et cetera. And we never communicate how much we're going to invest every quarter or every year, because that is how you end up doing the wrong decisions by feeling that you have to put money to work because you have committed to doing it. So, but we will be there. We are screening projects and we will look for opportunities to develop the company. And in terms of your other questions, where do we think we should be careful? Well, what we've seen over the cycles in the maritime space is that it's usually the owners who do it to themselves. Most of the downturns in the shipping market has been over-ordering of assets, over-optimistic owners who run out, and also maybe, companies who have sort of single segment assets. Because for us, with a multiple segment approach, we can evaluate these segments, and sometimes you see that this segment is it's a frenzy there. People are taking either too low returns or taking too much risk. So then we switch to another segment and focus there. Tanker markets on fire, LNG and LPG markets on fire. That's fine, but it's a very different investment thesis buying into sort of spot market operations compared to what we do, which is more long-term deployment of capital.
Yeah, I mean, that basically defines investing overall, the balance there, Ole. And of course, you have a very strong track record of of efficiently allocating capital. So, hey, thanks for joining us today. This was fun. It's always good to catch up with you.
Yeah, thank you. Bye-bye.